Taiwanese index that is up around 0.1%.
There's never been anything to compete with what we have all done.
We saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets.
The first tick on the index, quiet but positive. So that green hue continues.
The market's a good high. This is a good time to take money off the table and go spend it on yourself.
Listing is moderately higher, 322. The issue price was 300 rupees. So that's about 8% higher. Good listing for BKG Foods. For Global Health, let's just get it up on board. That's the one that's taking it away right now, 20% higher.
It's probably less important than the idea that the US dollar has just made a major peak.
The Income Tax Department has been conducting search operations at Metropolis Path Labs.
The markets have picked up. We're fresh 52-week highs on the Nifty.
So the Chief Justice there asking the petitioners to come back to the court only after it becomes a law, and then the case would be heard.
For the markets, it's flat but with some positive bias. We have seen a 70-point recovery from the lows.
That was the day so far. You're with us here on a new edition of Closing Bell. I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi. Again, a repeat of yesterday. So far, nothing. Absolutely nothing. 20 points down now on the Nifty. So very, very quiet. It's been that way from the word go. Third day in a row now, by the way. All 3 days, to be sure, have not ended flat. I mean, yesterday is a case in point. You got the surge in the last 45 minutes. But we'll see if we get a repeat performance today or not. Small cap index is down 0.4%, and that's putting a little bit of pressure on the advance decline ratio. I mean, actually, declines outnumber advances, but not by much. Public sector banks and IT stocks are seeing some gains. On the other side, metals are under pressure. I mean, this is, some here, some there, but really you can't decipher any meaningful trends out of the price action that you're seeing out there. And there are pockets of gains in select railway infrastructure stocks, railway financing stocks. We'll talk more about that. And you've got these defense plays, which are, again, but select names, HAL, etc., which are seeing some traction once again. But all in all, not quite that much, at least in today's action so far, with 1 hour to go. Rima, hi.
Hi, the only price action we've seen is about a 50-point fall on the Nifty from the day's high just in the last 30 minutes or so. So just pull up that intraday chart. But a point that I wanted to make is that India is the only major equity market which is currently very close to its all-time high levels. As we know, the Nifty and the sensex got to its 52-week high today. The sensex, in fact, went just 200 points away from its all-time high levels. And the Nifty is away from that level by a similar amount, about 200, 220 points. So we're almost there. Not quite, but we're almost there. But just take stock of the rest of the global markets across the regions and the gap between their current levels and their lifetime high levels. So in the US markets, the performance is quite disparate. Dow Jones is about 8% away from its all-time high levels. NASDAQ, which has taken a big beating, is about 30% away. In the European market region, it's about 5 to 11% away from its all-time high levels. And in the Asian market region, Hang Seng and China, these markets are down nearly 50% from its all-time high levels, while Nikkei is the closest to that, just down about 9%. So the point is that the Indian equity markets truly have been so resilient, and right now we can boast of saying that we're the only major market which is so close to its all-time high levels. Only thing is, if a lot of the experts we've spoken to over the last 2 days seem to indicate that there is some fatigue in the market at these levels. Let's run our viewers through what we've lined up for them on Closing Bell. The Nifty and the Sensex trade largely flat, even as the mid-caps lag. PSU banks, IT services lead with gains, while metals and FMCG lag. Important market opinion coming in from big market voices, Jonathan Garner, Lawrence Belanco and Ajay Srivastava. Catch key excerpts from our conversations later on in the show. Two big listings today. Well-known ethnic snack company BKG Foods lists at a 10% premium over its issue price, while Global Health, which runs the Medanta chain of hospitals, debuts at a 19% premium. All details and management commentary on Closing Bell today. And finally, we'll be joined by our Alpha Manager for the day, Ronak Onkar of PPFAS Mutual Fund, to discuss his top portfolio bets. All this and more in the next 60 minutes.
Well, as we speak, the Nifty did move a little bit low on the last few minutes, but we've seen a bit of a recovery in the last few minutes. So let's see how these final 60 minutes does pan out. But to understand what's the trade at this hour, well, Mitesh Thakkar joins us. Hi, Mitesh. Well, we have seen a bit of a downtick from the day's high. nothing to worry. I mean, you can't, complain about this. How would you trade the Nifty, though, at around this 18,380 odd mark? The Nifty Bank, though, is continuing to go strong as well.
Afternoon, Nigel. I think the only worry is that, yesterday it looked like a breakout towards the last 1 hour. And today, I think the follow-through is missing. And then, the breadth isn't very encouraging. So maybe the consolidation isn't yet over and we might still do this 18,300, 18,420 kind of a range. And, you would then want to wait and try to buy at lower levels. So you've kind of taken some profits off the long position which you're carrying for the last few days. And since there's some lag of momentum at the upper end, I think we're not rushing into a long trade. Right now, I have, in fact, one buy and one sell call. While the IT names look good and I picked up emphasis as a trading recommendation from there, it's a buy with a stop below 2,000 for targets of 2,100. The breadth, as I said, I think, is showing some signs of profit booking action. So Tata Power is coming under pressure. That's a sell with a stop just above levels of 227 and look for a target of 215 here.
Okay, just two names. Mitesh, thanks for that. We'll come back to you for more. Look at Adani Enterprises, which has seen a sharp sell-off. Actually, three names. Adani Enterprises, intraday will tell you the story. It's down sharply now, and most of the fall has come in the last, 5-6 minutes of trade. There you go. It's almost a waterfall decline. Look at Adani Green, which is the other one. Exactly similar price pattern. And then you've got Adani Ports, which has also fallen quite a bit in the last couple of minutes of trade. That's green, lesser as compared to enterprises, and then there is ports, which is similar in magnitude to what we've seen in the case of Adani Enterprises. So just a bunch of names which are seeing some cracks. They've been big outperformers all through.
Reliance Industries is also cracked. So let's just get that intraday chart. Something to do with rich people, I guess, right? Rich people, rich stocks.
Yeah, you're right, Rima. Reliance also is... but Reliance, the fall, actually, the intraday high was at about 130, and it's been falling since. This one, I mean, the Adani names that I mentioned, I think the last 5-6 odd minutes or so. But you're right. Overall, what 40 odd point cut now, 18,362 is where we are at. Prakash Devan is with us to take some questions. Prakash, good to have you with us here. Thank you very much. I mean, so the earnings season is behind us, and it's a slow crawl. Surely higher, but slow to the previous highs. But there is also some hesitation, which you can clearly see reading the screen, reading price action, right?
Oh, good afternoon, Prashant. Absolutely. So, it's never easy, especially when markets are close to all-time highs. Opinions start differing whether this is going to be a breakout or it's going to succumb to creating another top and reversing. But the way the market set up right now seems to be, and it's probably coinciding with the end of earnings season. Thankfully, this has been a real long, hectic season for us. What's going to happen to the market is there's some short covering that will probably come once we break through this all-time highs or get very close to all-time highs, and that gives it a little bit of that spurt before the consolidation happens. So my bet is you'll probably see all-time highs being crossed over at some point, and then with a ferocity that will probably again mislead people into believing this is going to go on. But that's usually the case given the market setup. But yeah, you know what? Interestingly, the earnings have really not been disappointing at all. It's been a mixed bag. Of course, the market's in a mood to punish what's not doing well and reward things that have actually shown promise and which will continue to probably do well even in the current quarter. So overall, I think it's been a fairly relieving season in that sense. There's no disappointment, and we've not succumbed to this whole pressure on the global front where valuations are getting kind of stretched. Everybody's talking about India becoming expensive, but probably if earnings play good and keep catching up with the pace at which the prices have gone up, you'll probably see a little bit of softness in the valuations come through.
Okay, today there has been the first sign of rebound in campus active footwear. Remember, the stock has sold off 30% in the last 1 month. Yesterday, Nimesh was telling us about how a few HNI smart money have been accumulating the stock after the recent downfall. But today, it's been steady as a rock, climbing higher, up close to about 5.5%. Very, very large volumes for another day running. Prakash, any thoughts on Campus Active? It's a great brand name. It's had a rough quarter, Q2, but the management commentary seems to indicate that things will improve, particularly on the margin front in the second half. At 450, how does it look to you?
So, Rima, it's a great brand, and that's exactly why you are willing to be gracious enough to start believing that things will start looking up. There is a little bit of that hope, but that margins profile was precisely the reason why you lost so much of ground on this counter. And the way people have got probably people have entered into at higher levels. What's going to happen is as you keep on seeing those levels come back, you will see a lot of exits. You will see a lot of retail selling pressure. And I know for sure that this was touted as one of the best plays on the consumption side, something very similar to Relaxo a few years back. And that's exactly why, you'll have to live with a little bit of volatility given the kind of exuberance that was around it. And once it crosses all of the previous highs of, I don't know, at 700 odd, then you'll probably see a little bit of a reckoning in terms of long-term investments coming in. But till then, be ready for these 4%, 5% moves up and down every day. It's not going to be a smooth ride for sure.
Okay, all right. Prakash, what about the defense stock that's on the offense? HAL at the high point of the day, up closer around 6%. I remember the stock was $1,000 lower. People are talking about an OFS. That didn't really happen. And just take a look at that stock. Wow, big move. What would you do with it at around 2,700 rupees, though?
Nigel, good afternoon. Yes, so it's been a high flyer for sure. And for the right reasons, the OFS getting deferred means the government of India has been the most rewarded out here. It is a great proxy to the defense play. And what's turning around this whole story is that the delivery visibility that is coming into some of these names like Mazgaon and HL and all is far better than what you've ever seen. They were always at a stage where they were researching, they were identifying newer designs, they were pitching for newer markets. But finally, all of that is seeing fruition, Nigel, and that's precisely why there's so much of an attractiveness. So, what's going to happen is, given the small float that you have in most of these stocks, if you don't buy into them, and for the long term, of course, you will not get them at decent prices at all. I mean, you'll get them at fair value. I mean, at very rich valuations because there's so much of demand and there's no supply coming in. Unless, as you said, that OFS probably comes about some point in time, but it'll get lapped up very, very quickly. So my sense is, if you have to buy into these stocks, there will be a FOMO. You will have to live with it. But you will always have to pay premium to get into these unique positioning that these companies represent. But yes, the current valuations are a bit stretched on the side of HL at least. Mazgaon could probably still see some traction given the visibility of earnings, the kind of revenue stream that it's booking as it kind of develops the ships. But the only thing I want to leave you with on HL is that if you get to participate in the OFS as and when it happens, first, don't miss out on that. But in anticipation of the OFS, don't expect the stock to correct, is my guess. So you'll have to wait for some good day to buy into it whenever there's a little bit of a correction and the market gives you that opportunity or that foot in the door.
Point taken. By the way, we spoke with Mazgaon Doc Prakash earlier, who for FY23 have raised their revenue guidance for the full year to between 25 to 30% growth over FY22. Their earlier guidance was between 19 to 20% growth. But they did say that, this is this year. For 24 and 25, they would still, at this point in time, given how things are, they would, if asked, project a 20% kind of a growth and not 25 to 30 that they'd likely do this year. Stock has already run up quite a bit today. It's up 1.5, one of the star performers. Listen into some of those sound bites from the Mazgaon Doc management, and we'll see you on the other side.
We would like to revise our guideline with respect to FY23 to around 25 to 30% of growth compared to previous year. So we are expecting somewhere around 7,400, 7,500 in case all the things go as per our plan. So that would be revenue guidance for the current year. Margins, we don't expect a significant change. However, there would be a positive effect definitely on account of raising the fixed costs as the volumes go up. So I would not be very particular about the margins. We would be maintaining a similar kind of a trend. Last year also the margins were better and a slight improvement could be there based on the higher volumes.
Welcome back. There's a pretty sharp sell-off, profit booking seen in the last 30 minutes for our markets. A few stocks which haven't succumbed to this profit booking are the private sector banks, Kotak Mahindra Bank as well as HDFC Bank. So they're holding on to all their gains. HUL has in fact moved to the high point of the day. So that's higher by close to about 0.3%. A couple of defensive names like Sun Pharma, Bharti Airtel too are inching higher. So these are few stocks which have bucked that trend of profit booking that we've seen in the last 30 minutes. Let's get you some more market opinion. This time it's coming in from Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley. Listen in to his views.
A new upcycle in semiconductors and technology hardware is poised to begin, and that's why we upgraded Korea and Taiwan within Asia and EM at the start of October. And I'm pleased to say both those markets are already performing very strongly in the last few weeks, which is highly indicative that the overall EM asset class has reached a trough. India is by far the most expensive market in our coverage. In fact, at a record high valuation premium, for example, to Korea. But certainly the valuations are very rich to history and to peers, and that's why it is an underweight for us.
All right, well, the other pocket of strength we have seen is the railway stocks. So just take a look at that. Some of them just flying away. Prakash, I wanted to ask you about your opinion on some of these stocks. But for the time being, let's hop across to Vivek Iyer. He's standing by to give us a quick check about the sector that's really been going like a fast trade. Vivek.
Well, absolutely right. There's been no stopping, these rail PSUs. So what we've actually done is, since October 28th, one date from which, all of these stocks have actually started moving upwards in tandem. Also, our colleague Nimish had highlighted it and, saying that, this entire pocket was being seen quite favorably by HNIs and also being seen as quite an undervalued theme. Well, is it undervalued anymore? Looking at the price moves, you probably agree that it's not. But let's have a look at some of the moves that these stocks have seen. The first one, of course, is IRCTC. It's been flat, but however, look at some of the moves the other names have made. IRFC, this stock is up almost 19%. Stock perched at a fresh 52-week high. RailTel is up almost 17%. Again, this one too is at a 52-week high. You're talking about RVNL. This particular stock has been the clear outperformer, up almost 57%, again at a 52-week high. And RITES, this particular stock has been flat. However, if you recall, our colleague Yasha reported on November 4th that there's a likelihood of a supply overhang due to an OFS, which is why this particular stock has underperformed relatively. Ircon is another stock that's up 34%. We also had a look at, the key takeaway from the Q2 results from these stocks. IRCTC, while the earnings was the marginal miss, one thing that the market hasn't liked is the fact that the company has said that they don't plan to hike the convenience fee, so they aren't looking at any fresh triggers for this particular name. RailTel, gave a very strong guidance of revenue and EBITDA of growth of 20% in FY23 and beyond. RVNL came to CNBC-TV18 and they indicated that they intend to keep an order book of about 1 lakh crore. Very strong commentary coming in there. And Ircon too, gave a very strong Q2 with a strong order book of over 40,000 crores.
Okay, all right. Thanks a lot for that, Vivek. Well, Prakash, what's your take? Normally, we ask you about the fast cars, the big bikes, but this time I want to ask you about the rail-related stocks. Some of them have moved like the fast train, as Vivek told us. Yeah. But do you believe there's still value in some of these stocks which you can still hop aboard?
So, Nigel, this is a tad late to find value. But what you could still do is look at some of these stocks which offer a very clear, visible growth path of 20%, 20% plus kind of, revenue generation and almost like a monopolistic situation. A case in point is RailTel. And we've spoken about this much earlier before this fancy came in, that, it has one of the best right-of-way cable networks along so many railway stations in India. It's second to none and it's independent. So, there are lots of optionalities, agencies which are associated with these names. But with every rising, price multiple, they will kind of get expensive. There's one stock that's still probably under discussed, and that's IRFC. I mean, it's a very boring business. It's the fundraising arm of the railway, and it just kind of, works on interest income and the spreads. Now, those spreads are very assured. There's enough business that it has. It's now finally come and crossed that issuance of 26 rupees, which happened after so many years. I mean, so almost a year and a half of the IPO. But it's a great dividend yield play. There's a dividend which is around the corner. So for people who seek that, it's worked very well. So so you would have to look at what suits you. But I think more or less a lot has been discovered. The P multiple expansion has already happened, and you'll have to kind of live with a little bit of more modest gains from here on going forward, as per the company specific growth outlines start kind of getting shared with the market. Yeah.
No, absolutely. IRFC 25th of October was at 20 rupees, 21 rupees, now at about nearly 27. So that's a 30% move in line with what we've seen in some of the others. Maybe a little lesser as compared to what Vivek mentioned earlier on those other names. Now, sugar is another sector. You've got a few, smaller sugar companies which are buzzing, Ugar Sugar and a few others. Manisha is here to tell us what is happening in terms of sugar prices globally and strong offtake in terms of the sugar export quota, Manisha?
Yes, that's exactly the two of the major reasons that you have seen the sugar prices and the sugar stocks as well do well. If you look at the international markets, we have the raw sugar prices, which are London-based, trading at a 7-month highs. It actually has been last 2 weeks when you have constantly seen the sugar prices continue to gain up. So not just London, if you look at the New York sugar prices, they are trading at a 5-month highs as well. And the global trades is really short covering when you look at the trade therein, because the prices, the expectation was that the global markets would be looking at a surplus next season at around 3.5 million tons. So this is the reason that a lot of traders went short here. But with the kind of price rise that you are seeing, with the kind of concerns on Brazil crop, Argentina, even Europe for that matter, the yields are expected to be on the lower side, and that is showing onto the sugar prices there. The second major reason clearly comes in from Indian markets here, where we are looking at an export quota of 6 million tons versus a record 11.2 million tons of an actual exports that we did last year. So a lower quota has led to some buying in the international markets. Out of the 6 million quota that was decided on 1st of November, nearly 4 million tons has already been contracted for exports. Remember, this quota is on until October 2023, and the government perhaps will take a view by end of January on whether or not they can increase this quota. So that is exactly what the markets are looking at. The third important thing is that a lot of sugar mills now seem to be renegotiating on the international prices also, because the international prices have run up. So we do understand that nearly 4 lakh tons of sugar that was already contracted, there are some renegotiations happening on this one because of the run-up that we've seen in the international prices.
Thank you very much, Manisha, for that. Prakash, any thoughts on the sugar names?
So I know it sounds cliched, but all of these are in a sweet spot. But and this was kind of we could see it coming, given the fact that UK and all are facing such huge shortages of water. There was bound to be issuance in terms of issues related to crop and the kind of demand that it would continue to not be able to meet, right? So the unmet demand in most international markets, coupled with the fact that we are exporting much lesser, and you know what, the best part is anybody who owns who has the quota, who want to trade it for some money, can still sell whatever sugar they produce as ethanol and things like that. So there's so much happening in that space, which is helping on the demand side. And remember, the best part is most balance sheets are far more healthier than what they've ever been. I've not seen in the last 20 years sugar companies have such robust balance sheets. So it's good to be with the larger players, though, given the fact that they're more resilient to any regulatory shocks. But I think it's still a great run which is ahead of them. At least 30% from here on would not be surprising over the next couple of quarters.
Okay, thank you very much, Prakash. Good chatting with you today. Let's also invite on the show Ronak Onkar, the co-fund manager, equity and head of research at PPFAS Mutual Fund on the show. Ronak, afternoon. This is Rima here. It's been a good year for the markets, right? Especially relatively. But the performance has been extremely divergent. On one hand, you've got banks which are up 20%, but on the other hand, you've got IT stocks down 25-30% so far this year. So as we enter into the last leg of calendar year 2022, would you look at any kind of portfolio rebalancing, and your thoughts on the markets and the setup and the positioning right now?
Thank you, Rima, for inviting me. So from sector point of view, if you see our fact sheet, more or less the companies that we own have been in the fact sheet for a long period of time. The narratives don't change. In fact, cyclicality will, of course, definitely affect the shorter term performance of these companies. So you mentioned private sector banks, which we have been owning in the portfolio for a long period of time. And the story over there has not changed. The longer term trends that we are seeing as a private consumer franchise in the lending space, plus you have a fee income coming in from the subsidiary businesses and the existing businesses, that keeps on being the case for all the private sector banks. And in technology, we are seeing the market anticipating perhaps the recession-like scenario coming in with slower growth across different verticals. And naturally, if IT services companies, clients may not want to spend more money, it might affect some short-term cyclicality in the businesses' revenues and profits for a while. And this has happened in the past. So this is nothing new which we are seeing. These short-term cycles do affect these companies. But I think if the longer-term trend remains the same, we will mainly stay put with our holdings that we have.
Okay. Hi, Ronak. Good to speak to you this afternoon. I wanted your take on two stocks. One is Coal India, which has done phenomenally well. Now, when the company does well, a government-owned company does well, the problem is, the government of India gets tempted to come ahead and sell some stake. That could be weighing on the stock. And what about NMDC? That as well was a special situation that was playing out for y'all. Now you'll be bracing for the steel plant to list. But with the core business, will you all hold on?
So with the coal business, our idea while we bought Coal India was essentially the cash flow certainty that we could see. In fact, India has, over a period of time, a 5-year period of time, has gone from a power surplus to a power deficit kind of a situation. And we are seeing that no new thermal capacity has come up at scale, and whichever existing capacity is there is running at full steam. And you need all sorts of raw material available in order to run these thermal plants consistently. So Coal India is a natural beneficiary to that consistent demand, and that demand leads to consistent cash flows, and that consistent cash flow leads to consistent dividend payout. That's one of the reasons why we had bought into Coal India. And because Coal India also is part of the index, and we also get to do the covered call strategy that we have in the fund. So a lot of these aspects make us hold Coal India for now, but maybe there is a short-term overhang in terms of government selling its stake. We will see how it goes up. But in MDC, the demerger has already been done, and we'll wait for the listing of the steel plant. Let's see how that situation plays out.
In your portfolio, in terms of weights, what's the weight of international stocks? Where was it, say, a year ago? I mean, just some perspective, because I mean, those rules have not, the relaxation actually has not come through, right? For the industry to be able to put more money.
Yeah, so a year ago, you would have seen a third of the portfolio being invested in global securities, the global stocks that we own. But now it's somewhere close to 16%. So which has come down on accounts of the prices of those stocks falling. At the same time, incremental money has now been invested in international stocks. So the weightage has come down from 30 to 16%. And the rules remain the same. So we haven't heard any updates from the regulators regarding the repatriation of funds to buy foreign stocks.
Half, right? I mean, so, you typically, being contrarian, you would want to increase exposure, right? Exactly at this point, which one cannot do because of... So I can, it must be frustrating. I mean, is there a get around this? I mean, how do you deal with this?
So investing in foreign securities for the fund house is it's not an old thing. I mean, we have been only investing in domestic stocks when we were running the PMS. We have a tax saver fund which invests only in domestic stocks, and even the existing portfolio, we anyway have to invest up to 65% in domestic stocks. So we'll have to invest in our markets only. And whenever that rule comes up in our favor, when we can invest globally, we can again rebalance it. So rebalancing is in our hands. The whole idea behind investing globally was to essentially diversify and find unique opportunities which otherwise will not find in India. And that is the purpose of having the diversification. Otherwise, if there is a good enough business available in India to own, we'll definitely own it.
Ronak, the current buzz in the market are defense stocks, some of these rail PSUs, but there's still a lot of disbelief about these stocks because they've gone through a very long period of underperformance, years and years of underperformance. There is interest right now. There are government policies, a thrust from the government to boost these stocks and their performance. Are you a buyer, believer in these themes?
I think the only rail stock we own in our conservative hybrid fund is the IRFC. And IRFC we bought essentially for the dividend yield because the conservative hybrid fund is a debt fund. But across the broad spectrum of railway and other stocks in the PSU categories, I think it remains to be seen how the actual data comes out, how these companies actually perform. So you're right about saying that over a period of time, the stocks have been underperformers because the business has been not very steady. So now if the data comes in and says that over a long period of time, across cycles, the business is doing very well, then it becomes a good case to track them, and we'll get some stability in how these companies perform in terms of cash flows.
Ronak, I wanted to ask you about the platform company, that's IEX. What a dream run the stock had. It went one way. Now, on a month-to-month basis, everything's looking disappointing. Their volumes are looking disappointment. Where, in fact, we had the management, and he's sounding optimistic that things will recover. He said a couple of triggers are there in the month of December as well as January, which will protect their market share, and volumes will pick up from there on. But, given that you have held this stock, and it's half of what it was now at the peak, would you look at adding more?
So in the platform companies, the interesting thing is, exchange like IEX, the network effects are already established. And near term, I have no visibility as to how the business will perform. But in the long term, we know that there is a need for a power exchange in various scenarios. Wherever there is a short-term demand for power, both buyers and sellers need to have a trusted platform where they can immediately match the orders and no need to worry about having some pending quantity or capacity with them. So it's interesting that the exchange exists, and also the competition point of view, it has to prove itself in terms of being a useful utility for matching these orders. So I think from an exchange mechanism and exchange regulated entity point of view, if you see global examples, these exchanges are required, and as more and more instruments keep coming up. So right now we only have a shorter term instruments. If slightly longer term instruments keep coming up, if renewable power becomes a larger part of the power supply, and I think all these factors will definitely in the long run help business of an exchange. How well will IEX do remains to be seen. We will wait and watch for the performance to catch up.
Thanks a lot for that, Ronak. Well, a lot of moving parts on IEX, actually. There's one school of thought that says maybe the current transaction fee itself will come in for a bit of a cap, but we'll have to see how that plays out. Always good hearing your thoughts. Thanks so much for joining in and speaking to us here on CNBC-TV18. Well, for the time being, we've seen a good recovery from the day's low, close to around 30-40 points odd. I think now not only on expiry, on a day-to-day basis, you're seeing that 3 p.m. move, so to call it. So we were down 40 points. Now we're well in the green. Slip into a short break. Nimesh is waiting for us on the other side. He'll tell us what he's picking up in terms of dealing room chatter. We'll have our technical experts as well who'll be back with us. Welcome back. You're tuned in to Closing Bell here on CNBC-TV18. We're talking about the bit of a recovery that we're seeing on the Nifty, 40-50 points from the day's low. Bharti Airtel, that stock is screaming away. Remember, post its numbers, you had a couple of brokerages that downgraded the stock. They believe that bulk of the good news is in the price. For the time being, it's proving them wrong. The stock has moved higher. Kotak Mahindra Bank from the banking pack. Remember, that's been a relative underperformer, but that's playing a good knock, so to call it, this afternoon. The stock, as we speak, move into the day's high. But as promised, Nimesh is with us. Nimesh, tell us, what are you picking up in terms of the dealing room chatter? Flows continue to remain strong?
Well, actually, flows have been tepid for the last few days, and that's been the consistent feedback as well, that there is not much participation coming in from the larger FIs, whether it's DIs or the FIs as well. But, today is the first sign of some bit of profit booking, and that profit booking is across the board, whether it's large cap names, whether it's the mid cap and the small cap as well. So, looks like there is some bit of money taking out of the table now from the larger FIs as well as from the retail and HN investors. So, that's the overall feedback that I've picked up today. I guess, in the mid-cap, which is the index is down close to 1%, and that's where the bigger pain seems to be. I guess the bigger worry is the kind of blocks which are up for, up and coming. So on my fingertips, I can tell you there are indication of 7 to 8 large blocks coming in a very short span of time. So I guess that supply overhang seems to be putting some pressure on the mid-cap and small-cap side of the market. So that's something to watch out in the days to come. On the other side, the sector which is doing well is the defense sector, which has been the trend for the last many days now. And the rail PSUs for the last 1 month, you're seeing a big move in those stocks as well. So it looks like the market is only trying to chase the momentum, at least in the near term, and that's where you're seeing the momentum in those stocks. But as I said, today is the first day of some indication of profit booking across the board. I guess even from a technical point of view, it looks like the market is trying to struggle to reach that all-time high. So maybe it one day, there will be a large gap up and we'll see that all-time highs in the market. But till then, looks like we'll struggle around that 18,400 marks on the Nifty as well. So that's a technical feedback. But broadly, the sense is lack of participation from the larger institutions. and first signs of profit booking now across mid-caps and small caps.
Well, Nimish, from a bullish perspective, we don't mind taking them a bit of a break in terms of those buy flows, but we don't want them to come and start selling big time. So maybe, in fact, some kind of consolidation par for the course. But individual stocks, what are you picking up?
So, in terms of individual names, the first stock is Polycab. As I was telling Nigel, there is a lot of indication of large blocks coming in, and Polycab is one of those stocks now. Again, there is a strong buzz and indication of a large block coming in Polycab very soon, and hence that stock is under pressure today. So that's the first one. The second stock is Nykaa. Again, we indicated yesterday as well that there is going to be a large block, and again today there was a large block of close to 1% equity changing hands, and there has been a consistent selling pressure coming in from the larger FIs in Nykaa of late. Remember, the second part of that lockup in Nykaa ended yesterday because of that bonus shares, and that's now getting sold into the market. So that's why Nykaa is under pressure today. And the last stock is Kotak Mahindra Bank. Nigel put out that alert of that one stock which is buzzing in trade, largely on back of buy flows. So this is one stock where I believe the large part of selling is over, and some large FIs have started buying into this particular stock. And hence you're seeing Kotak Mahindra Bank outperforming in the bank nifty today. But again, Kotak Mahindra Bank has been an underperformer of late, but today's move is largely on back of strong buy flows at a leading FI desk.
All right, Nimish, thank you very much. So that's basically what you should watch out for. Mitesh is now joining us to run us through what to buy or sell today for a reverse trade tomorrow. Mitesh, hi. Afternoon. So again, it's a flat kind of day, no fireworks yet. There's still, though, 20 minutes to go for close. Would you want to do something now for tomorrow?
Yeah, Prashant, but at least, we have some recovery in the last hour. So I think that trend still continues. I have a BTST call on Kotak Bank. I think we're just discussing that stock in detail. That's a BTST with a stop at 1955 for targets of 1985. And the other one is HAL, making a fresh swing high after consolidation. Buy here with a stop below 2665 or BTST with a target of 2715.
Thank you very much for that. Let's turn our attention now to the IPO corner. Medanta operator Global Health listed on the exchange's very smart debut, 19% premium over its issue price. Sonal is here to tell us all about the new listing. Sonal?
Well, yes, it's a strong listing for Medanta this time around, up 20% in trade as we speak. Well, if we look at the valuations, it saw strong subscription around 10 times when the IPO was announced, and that's the reason why we've seen a strong subscription figure as well. If we look at the valuations now at this pricing, it was issued at 17 to 18 times, and at this pricing it's trading around 22 times, which is more than the likes of Fortis, HCG, but lower than the likes of Max and Apollo Hospital. So it's largely at average prices if we compare it with the industry average as well. As I said, it saw strong subscription, and fundamentals of the company are also quite strong. If we look at their revenues, they have grown by 27% in Q1. Margins came in at 21.4%, which compares with margins of 20.6% in FY22. Profits also up by 41%. So good growth is what we saw in the company's quarter gone by. The company, as we all know, is promoted chain of hospitals by cardiac surgeon Dr. Naresh Trehan. It operates a network of 5 hospitals under the brand Medanta, has beds of around 2,467 in terms of number. We spoke to the company. They said that they plan to increase it to 3,500 beds by FY25, and there's one more hospital that is under construction right now, which will drive growth for the company, and international medical tourism is increasing as well. So these are the updates as far as this new listing is concerned.
Okay, thank you very much for that. Ambrish Baliga is also joining us on the show now. Ambrish, Medanta not as expensive as Max Health, which Sonal said trades at about 35, 36 times, but its valuation now after this 23% up move is similar to Apollo Hospitals or Narayana Health at about 22, 23, 24 times. At these valuations, at this stock price, is it attractive to buy?
No, it's not. I think at these levels it's fully priced, and the stock was expected to list at about 20-25 rupees premium, but despite that it has moved up much beyond the expected levels. So at the current levels it's fully priced, and you really can't value it on the same lines as Apollo because that's much larger. So I think it should be quoting at a discount to that. So at these levels I'll not suggest fresh buying.
Coming to you for Bikaji, which is the other listing, but let's get in Mangalam to talk about how that stacks up to listed peers. Mangalam.
Well, the bhujia is spicy, it is crispy, it is tasty, but it is also expensive because it was offered at a premium to other peers, and at the same time, with the 10% uptick that we've seen in the stock price, the market cap has crossed almost $1 billion. It, appears to have gotten even more expensive. We spoke to the management today about the triggers for the company going forward. They said that in the second half, there would be double-digit margin as against 7% what they did in FY22, and they are targeting 2,000 crore revenue in FY23. Why just FY23? Going forward, they believe that, revenues can grow between 20 to 25% and they don't need any capex all the way up until FY25-26, where they get to 4,000 crores in terms of revenue. In fact, they also spelled out that for FY24, if they do about 2,500 crores of revenue, 250 crores of EBITDA, it would translate into 120 to 130 crores of profitability. So using those numbers itself, if you calculate, the stock is currently trading at 63 to 64 times FY24 price to earnings. Where do the other peers trade? We have DFM Foods, which is trading at 40 times, hasn't done anything for the last 5 years. Pratap Snacks, below its issue price of over 930 odd rupees, currently trading at 35 times 1 year forward earnings as well. And why just these two? A lot of the large food snacking companies, FMCG companies, if you compare it with Nestle and Britannia, which have higher metrics as well, Britannia is trading at a discount to Bikaji, whereas Nestle at 65 times, just the same rate at which Bikaji is trading.
All right, Mangalam, thanks very much for that. So that's a valuation comparison again. I mean, not cheap at all. Amrish, any thoughts, Bikaji?
It was expensive at the IPO level, so even at current levels, I would still say it is expensive because competition is increasing, no doubt, in that space, and we will see the packaging costs, especially, will rise over the next 2 to 3 years as the EPR comes into effect. So, I would suggest people who have applied in the IPO and got allotted, possibly it's time to exit than to hold on.
Okay, all right. Amrish, as we speak, there are a few of these mid-cap IT stocks that are moving higher. Emphasis, just take a look at the intraday chart, that's moved to the high point of the day. But I believe from the mid-cap IT pack, you like one of the stocks that are most expensive, but it has its own niche segment. Tata Elxsi, tell us more.
Tata Elxsi, so it's a preferred ERD, that's engineering, research and design partner to leading manufacturers, OEMs and tier 1 suppliers. And this space is growing at about 13% CAGR. And by 2025, expecting it to be a $63 billion opportunity. And in this space, Tata Elxsi has been growing at 23% CAGR, which is about 10% higher than the industry. The company is strong in segments like automotive, telecommunication, media and entertainment, consumer electronics, healthcare, mainly medical devices, and autonomous driverless vehicle technology. Tata Elxsi is has a very key role to play. But after an outstanding performance in Q1 FY23, the Q2 numbers were below estimates, and that's one of the reasons why we have seen the stock correcting sharply. I think it's a good opportunity now since the deal pipeline remains robust with a good mix of deals and traction in the transportation and medical segment. So I'm expecting a revenue CAGR of about 25% over the next 3 years and a PAT CAGR of about 27%, which translates into an EPS of about 130 for FY24. So I have a price target of about 9,100.
Okay.
Tata Elxsi, it's kind of difficult to keep track. You do, of course. But the June lows were around 7,200. Then in August, it came back all the way to almost 11,000, right?
Yeah.
And then from there, it's now down to 7,000 or just under 7,000. And Amrish is saying this is a good opportunity.
But his target price is 9,100 on an expected EPS of 130. Amrish, you're pricing it on a forward multiple of 70 times for a company which is growing 25% on the top line as well as a little more on the bottom line. Isn't that expensive?
Yeah, exactly. Here we are talking of 25% CAGR for the next 3 years. But if you ask me, over the next 6-7 years, it should still be around the same levels. In the sense, I will not be surprised if it's not, less than 20-21%. If you're talking of the next 5 to 7 years. So with that sort of a growth, I don't think 70x is too high as such.
Okay, so Amrish believes the decline in the stock price post a muted set of Q2 numbers is a buying opportunity. Just before it came out with the Q2 numbers, the stock price was closer to 8,500. After Q2 missed estimates, we've seen the stock price now decline to sub 7,000 rupees. So pretty sharp fall seen in the last 1 month. Amrish, do stay on, need to get into a break. And as we do that, we'll get you some important market opinion coming in from Lawrence Belanco of CLSA. Listen in.
We saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets. And our work that we've done on our cycles into 2023 does suggest that we do overshoot the upside, and we think the S&P can trade above its 200-day moving average, and the Nifty on the back of that should trade to new all-time highs, and we get an upside target closer to the 20,100 area for the Nifty into the first quarter of next year. If we look at the Indian markets, through the first half of this year, we found that support around the 15,500 area, and we do think that's shifted up towards the 17,000 to 16,900 area. So that should be a sort of a key floor heading into the first quarter. One of the key setups that we're looking for into 2023 is a more significant top in that dollar index. So in the near term, there is support between 103 and 105. It's basically the 200-day, but also the 2017 and 2020 highs for the dollar index. And at some stage in the second quarter, we do think the dollar does get a rebound, but that rebound forms a lower high, and that's part of the topping pattern that we see for the dollar in 2023. And ultimately, towards the end of 2023, we think the dollar index is trading back towards 95. And that should put the Indian rupee back towards 75 towards year end of 2023. So our base case on the broader commodity side is that we think we're in the secular bull market, and we think that will continue to extend. And if we correct in our view of a dollar top, we think that dollar weakness will also support further re-rating on the commodity side. Recently, we've seen a breakout in gold that we think we can trade up to 1880 there. We've got longer-term upside targets of 2150. As far as Brent goes, we think we're in a holding pattern basically between $88 and 123. And in the short term, you've got a base forming above that $88 to trade back towards 113 to 115. So, trading range is the worst case scenario we see for commodities, but within that space, a general uptrend we think continues to play out.
Okay, welcome back. About 9 minutes to go for close. We are off the lows, of course, the lows which we hit about 45 odd minutes ago, but it's absolutely flat. 18,400 is what we have. Amrish, of course, is still with us. Amrish, I want you to listen to this soundbite from Ajay Srivastava, who we spoke with earlier in the morning, and I'll come back to you for your reaction. Ajay is basically saying that, equities have had a fantastic run. If you're making a lot of money, take some off. He's also saying you should seriously look at fixed income investments. Yields are pretty decent, and you can lock in some high yields for the next couple of years. Listen in.
My sincere advice to everybody would be, markets are good high. This is a good time to take money off the table and go spend it on yourself. Investing in this market at these prices, valuations, you could be in for a big disappointment compared to many other sectors you want to invest. So if you want to invest, perhaps, I would not recommend equity. Strange coming from me, at this point of time, equity investment. Look at a 12-month horizon. You will never make returns to beat the debt returns at this point of time. You'll never make it. So you have two choices. Either you invest now and repent later, sell now, spend it on yourself and feel happy, or put in debt and you'll be a much happier person. We continue to be very strong on the mining sector. In the correction, we picked up a lot more stock, and it's done reasonably well at this point of time. I think mining will remain a good stellar for India perspective. It's done pretty okay in this year, not so bad compared to with dividends and capital gain put together. You got a yield of about 18%, which is okay. I think mining will continue to be. Power sector, I think, should give phenomenally better returns as India realizes that you need to pay for power, both broadly speaking, at the end of the day. Government defense, you can invest, and they have done phenomenally well. We have been saying that, but invest with the peril that they can be the same way, they can go the same way as an IOC or BPCL. It's a government diktat to say you make 7.5%, 12% return. It's a tulip mania in a different word altogether. They don't make any money, they lose money, and they still got value. They sell for 200 crores, they make a 200 crore loss, does it need to be a genius to do that kind of stuff? Man, I tell you, I can find 100 other people who can sell for 200 and make a loss for 200. Ask the airlines, they do it very well, actually. So, I would say just stay away for the time being. These are overhyped, overvalued. They still haven't gone down to Earth. And Earth is still far from them. They're still not there close to it.
That's Jay Srivastav. Amrish, any thoughts? Just respond to that fixed income point which Ajay was making.
Overall, I would agree with him to a large extent. In fact, one should keep taking money off the table because markets don't really move in one straight line. And currently, I think they have become quite expensive. And there's a disconnect with the ground reality and market sentiments. So book some profits. In fact, my clients are about 30% in cash. And in fact, we have not kept that money idle. We are using it for the IPOs, and you're seeing the sort of returns the IPOs are giving. And as far as fixed income is concerned, here I expect the yields to move further. So at this point of time, I'll not make a large investment into the fixed income segment. I'll wait for a while longer. In the meanwhile, like I said, we are in fact using that for the IPOs.
Any other stocks where you are seeing some mispricing, valuation comfort, where one can generate alpha?
In fact, I had suggested IRFC last week, and that's, I think, moved up about 10%. But still, it's been a very slow mover. My expectation is that we should see levels of about 30 to 33 for this stock quite soon. Basically because, the company has been growing at about 30-35% CAGR last 3 years, whereas the stock which had, the IPO was at 26, and it had gone down all the way to 20. So there's a lot of catch-up to do. So even at the current levels, which is nearly the IPO level, I think it's still quite cheap. We should still see another 20-25% move from here.
All right, Amrish, final question before we let you go. What about tire stocks? Apollo came out with a very good set of numbers. The stock was flying away. It's coming for some profit taking. Balkrishna Industries, the numbers were a little bit disappointing, but they sounded optimistic on the call.
Right.
What do you make of them, some of these tire stocks? Still offering some value, or do you believe that you've missed the bus?
No, there should be some correction. I wouldn't suggest buying at this point of time, both of them, Apollo or Balkrishna. Balkrishna, again, I'm not too bullish on that because of the export market, which is suffering because of the slowdown there. Whereas, as far as Apollo is concerned, we are seeing some slowdown in the replacement market. So possibly one should wait for some correction out here. In fact, I had said about nearly a month and a half back that we have booked profits in Apollo and we would wait for lower levels. So possibly either 15% lower from here is where I think I'll start getting in again.
All right. Fair enough. Brief, we'll leave it there. Good chat today as always. Appreciate you joining in with that perspective. So, we're going to end with a 1.5 odd point change on the Nifty. The banks, by the way, did a little better. The bank Nifty will come up on your screen, and that was definitely better than the Nifty. Broader markets, mid caps and small caps ending lower, and the pressure there was pronounced. 0.5%, 0.75% on those indices. You want to look at the large cap Nifty gainers. As I said, mostly banks. So Kotak and HDFC Bank stood out. There was Coal India, which was higher. In terms of losses, the Adani names, Enterprises and Ports, both were lower. Apollo Hospitals saw some pressure, and we had Tata Steel, which was under pressure as well. But, in the broader space as well, Rima, more declines than advances today.
Indeed. So the mid-cap index goes home with a cut of about 0.7%. The advanced decline ratio 2:3. Talking about the winners, let me start with the companies which debuted on the exchanges today. So Global Health, the owner of Medanta, up 23%, and Bikaji, a bit pricey at about 60-65 times forward valuation. That stock ends with a modest gain of about 5.5%. HAL, big mover there. The company has raised the EBITDA margin guidance to 26 to 27% versus its earlier guidance of 24 to 25% in terms of EBITDA margins for FY23 to FY24. So HAL is a big mover. The gains continue for the likes of IRFC. IRFC is up 7.5% today, taking its month-to-date rally to close to about 20-odd%. RVNL. So across the board, these rail PSUs are higher. Defense stocks like Mazgaon Dock also surging in trade. A couple of banks like Karnataka Bank, South Indian Bank go home with gains of about 3.5%. On the losing side, Apollo Tyres, big bout of profit booking, stock down 7%. Nomura today downgraded the stock. Nykaa under pressure for the second day in a row, 4.5%. Bonus shares got credited, so perhaps a bit of a supply impact there. Nigel?
Well, you look at the headline index and you'll say it was a quiet day, but you look at the broader markets and stocks were doing their own thing, particularly some of those mid-cap stocks and smaller cap stocks. Some of them did very well. Atul Auto, you had that fund infusion coming in from Mr. Kedia. The stock was up close to 10% in trade today. HCC, that debt recast, I think, is taking shape. That one was up close to around 10%. Kirloskar Oil, the numbers look quite good. On the con call, the management sounded quite optimistic. That one as well was up close to 10%. Finolex Industries, from the recent peak, it did see quite a sharp correction, but today it was flying away. That stock has did pretty well. Cosmo First, remember, it's half of what it was at its peak, but the street seems to be giving it another chance, so that stock as well was higher. In reaction to its con call, you had Parmec. Well, that stock as well was up close to around 8%. So these are a few of those big gainers that we saw in trade today. Add to the list a couple of other names. Lotus Eye, well, that stock was doing pretty well. You had Home First Finance, well, that stock, in fact, did do well, was up 7.5%. And remember, some of these moves coming on very large volumes in trade. So yes, the mid-cap index was under pressure, but a few of these names, well, they went one way, that was up. Metropolis, because of those tax concerns, well, that stock was under some pressure. Steel Strips was down close to around 6% in trade. You had a couple of other names like PC Jewelers as well, did see some selling pressure in today's session. So to sum things up, the headline index was more or less quietish. The mid-cap index was a relative underperformer, while the Nifty Bank, that's the one that's having the dream run, and that continued today. While the Nifty ended flattish, the Nifty Bank went home with a century. Well, on that note, though, we'll have to wrap up on this edition of our Closing Bell. You stay with us, because on the other side, we have a very special guest that's lined up on It's the Economy, Jonathan Garner as well as Chetan Iyer.